I'm in the car right now. I'm going to be speaking about my trading journey so far. It's day 2 of the Trader's Diaries. I filmed part 1 2 days ago, but it's the weekend, it's Sunday, and of course all weekend I've been backtesting and I've been learning about trading. I did 1 backtesting session yesterday and I've done 2 backtesting sessions today, which doesn't sound like much. I had a bit going on throughout the weekend as well, but this time going through backtesting I've been doing a lot of journaling. And I did a lot of reflection this morning and I learned a few extra things as well. I've been doing a lot of psychology, watching a lot of psychology-based videos and advanced price action, which I feel like I'm going to start sharing soon, resources that I'm learning off of. I've had a lot of people ask me how I got started learning trading. I've spoken to quite a lot of people about it as well, just people asking me. And I just want to say it on here so everyone knows and it's no secret, just in case you're scared to ask or anything. I started learning about a year when I started learning when I turned 18. I turned 18 in June. I'm 19 now, so it's been like a year and a half or a year and a few months. I just learned basics like candlesticks and stuff. I was more going into it wanting to invest, so I learned about more investing type, but that's still learning the market at the end of the day. So that's kind of why I picked up on a lot of things quite easily, because I learned about investing and just being on the market in general. I already had my broker and stuff set up, so it was pretty easy to get back onto it. And then I've always been wanting to do day trading, but I was like, when I have enough money, I'll start. And then I just never obviously did. And obviously you don't need to have a big amount of money to start. Like, I have a few thousand saved up now that I've been live trading with that I'm more than happy to lose. Like, it's whatever, but you really don't need that much to start. But anyway, I ended up watching or coming across Trades by Sky. I watched one of his videos and I heard about ICC. I was like, oh, this is just another concept to try and make things sound new and sell a course. And yeah, I just blew it off. I was like, no, this is just another person trying to sell their course. And then I actually came across one of his interviews and I was like, let me just listen to this and see what his real story is. I came across his story, insane, homeless at 16, trading at 18. He made his first million in his first 4 months trading. Given that he was trading penny stocks, I'll still give it to him. That's really good. And obviously since then he's turned into the person he is today. He's been trading for 5 years and he's doing really, really, really well. And he has all of his knowledge out there for free. And I always think from people that are selling courses, gatekeeping some type of information. But if he's got it all out there for free, nothing is being gatekept. There's nothing I could possibly pay for. So there's no excuse. That's basically who I started learning from. And then when it comes to more advanced things, I started also learning a few ICT concepts from Justin Werlin. His videos are really good. You don't need ICT concepts to trade ICC. It just kind of helps me read the markets better and read structure better. And then for advanced structure, like market structure and understanding of price action, I highly recommend Fractal Flow. That's another amazing channel. I wouldn't recommend it for beginners. I think it's a lot more advanced. You've got to be ready to sit there with your notebook and take notes and fully understand everything. Sometimes I watch his videos and then I'll go onto the charts and backtest, and I don't really backtest, but I'll just look back at the charts and see if I can pick up some things and if I can see it in real time, and that helps me really understand the concepts. But his videos are really good. There's market structure one I was watching this morning, amazing. Order flow videos, literally just watch all of them. I've gone through all of them yet, but I'm trying to get there. But they really help you understand, especially when it comes to volume. Volume is also really important for me personally in reading price action. It's helped me a lot, especially I've noticed during backtesting. So understanding volume using his videos was really helpful. But yeah, that's literally it. That is literally it. I did go through TGR's bootcamp. I wouldn't say it's as good as people hype it up to be. I've seen some people watch his bootcamp and then go straight into live trading, or they'll go to the boot camp and then they'll do a little bit of forward testing and then they'll go straight into prop firm trading, which is totally cool. Props to them, that's amazing. But for me personally, I couldn't take the information that he was teaching there and then apply it to the markets. I wanted a more in-depth understanding because it teaches you price action and everything on a very basic level. But then when it comes to understanding things on a deep level, understanding what is a fair value gap, why is a fair value gap a place where price makes a reaction, what is an order block on a deeper level, and understanding things like market structure, liquidity, everything like that on a deeper level. That's what I needed personally to start trading more confidently, which is what I've been working on. I haven't mastered everything, but I'm getting there. Fractal Flow is really helping me. But anyway, I guess it's all part of the journey. I guess you guys might want to know. That's basically how I learned and how I've been learning and how I'm continuing to learn. I've been watching a lot of psychology videos. Justin Werlin has some amazing psychology videos, and I found this other channel, The Profitable Mind or The Profitable Trader or something. Again, another amazing channel for psychology videos, but I'm going to post a video on my TikTok probably of some screenshots of some videos and channels I recommend. And then when it comes to my trading journey personally, I've had really good backtesting sessions this weekend. Again, I've only done 3, but all 3 of those I've had an above 70% win rate, and I've had a pretty decent percentage gain on the account. I've been a lot more confident, which is amazing because I've had backtesting sessions where I've had an 100% win rate. I had one that was a good 100% win rate. I got 6 trades, I think. But then I've had a few other 100% win rate trading sessions. A lot of people have these like massive reactions when they see that I have an 100% win rate. I in no way, shape or form am saying that a 100% win rate is a realistic win rate over a long course of time. Over a 1-month period, totally realistic in my opinion, especially if you're only taking setups that you're 100% confident in. For my time, I was only 100% confident for one of my sessions. I was only 100% confident in 2 trades, which is like, it's not good. That's not good to only be confident in taking 2 trades in 1 month, especially when there was plenty of opportunities that I was just too hesitant to take. But it's also not bad. It's good to take on these setups that you're confident in. But yeah, I've had a few people get pretty upset or like triggered, I think is the right word, when I said that I had an 100% win rate on a session. But anyway, they probably won't end up watching this video, but I just wanted to put that out there. I've had quite a few really good sessions where I've had an above 70% win rate. My sweet spot at the moment is seeming to be like 70 to 80. I really want to get 80% plus because I'm taking a few silly trades. I took a trade, oh, it's so cold. I took a trade in the recent backtesting session that I did. That was out of session. It was literally after New York session and I was targeting so high, and it was just so stupid because it was like, how do I expect the New York high to be taken out of session? Like, yeah, it was just silly. So that was a silly mistake that I did, and like I wouldn't be trading out of session in live trading, so it didn't really make sense for me to take that trade because that's not a part of my strategy. I like to trade in session. And definitely not after New York session because yeah, I don't know. Anyway, and there was one that I took that was silly. Oh, I've journaled my trades. I've journaled them. I just can't give it off the top of my head because there was a few, because obviously I've done 3 backtesting sessions, so there's a lot of trades there. I think there's one I took a trade based off of an outlier. There was like some funny over the weekend of market open, so like the market here, like pretend it's here, and then it opened here, so there's obviously a gap got filled within the first 5-minute candle, and then there was just like this weird with just the wicks, which there's different words for it, but I can't think of it off the top of my head, I'm not gonna lie to you. I know windows, gaps. Windows is, I'm pretty sure, when there's nothing. So I don't know what it is when there's just 2 wicks. I don't know if that's still considered a fair value gap or whatever. I know it will probably look like a fair value gap on a higher time frame, but anyway, rambling. So yeah, that was the weird little price action thing that happened over the weekend. So I was basing my trade off of that one candle, which was just a little bit silly because that wasn't proper market structure. Like I was listening to a fractal flow video. They said to identify outliers in the trend. So like say if the news spike or something and the trend continues, or like say if it's that situation where it was like over the weekend there's like some randomness, you need to like kind of identify when to and when not to follow those. So that was a silly one that I took, and the proper retracement level would have been, yeah, it was like a winning trade, but I just didn't base it off of the right level. And this is the one that I've just remembered. I had a trade. This was in this one backtesting session that I just did. I got a 9% gain on that month, which I'm so happy with. But there was one trade where I just put my stop loss in the abyss. Like I put it was not based on anything. Like it was just silly. I was watching this video today, which was like really useful. It really reinforced the things that I believed in trading, but my comment section was telling me was wrong. Everyone seems to be like, everyone was getting annoyed, or like not annoyed, like triggered at the fact that I enjoy taking 1-to-1 risk to reward ratio trades. Like I like taking my profit at a 1-to-1. I want to have a high win rate. Like I want to have consistency in my trades. Yes, I could take runners. You know, if I had a 1 to 10% risk to reward ratio, I only have to win 1 out of 10 trades and then I'm profitable. I don't want to win 1 out of 10 trades because that doesn't prove that I'm a good trader, in my opinion. Like in my viewpoint, I'm sure everyone else has their own opinions, But just for me and my personality, I wouldn't look at 9 losses and be like, yep, it's chill because I've got a 10 to 1 risk to reward, a 1. What's that noise? Anyway, I've got a 1 to 10 risk to. Anyway, I'm gonna take that as like I'm a good trader because I got that, because it's like I still have 9 trades that I can take improvements on, if that makes sense. And that's how I've been looking at my trading. So even though I've got that 70 whatever % win rate, I still look at whatever losses. So I won 13 trades and I had 5 losses. So I still look at the losses that I took, even though I got less losses than wins. I still look at those and be like, okay, where can I improve? And I'm taking silly mistakes like that, like, you know, like the at a New York session, whatever. So that's how I look at my trading personally. So that's why I am happy to do a 1-to-1 risk to reward ratio, or I hate these noises. I'm literally in my backyard. So my mom's partner opened the door and is like, what is she doing in the car? I told him not to recording a video. Anyway, so I like to try and find areas of improvement in my strategy, and that's how I personally like to trade. So I'm happy to take a 1-to-1 risk to reward ratio. But I was watching a video today and he was saying to always put your stop loss at a key level. So where your trade is invalidated, that's where you should be putting your stop loss, and that's where you should be putting your take profit. So you shouldn't be just putting your stop loss at the one area where your trade is invalidated and putting your take profit at a 1 to 4 or a 1 to 3 or 1 to 2, whatever your happy risk to reward ratio is. You should be putting your take profit at wherever the trade is showing you it's going to go to. So for me, it's my indication level. My take profit is at my indication level. I'll take a partial and then I'll leave a runner. And then my runner will be stopped, or I'll take profit after my runner breaks market structure. That's how I've done my trades. But I've also learned that during Asia session, it's sometimes good to just take all of my profits at a 1-to-1. But yeah, guys, making me so uncomfy. Yeah, I'm gonna wrap it up now. But anyway, yes, that's my journey so far. I will be trying to film a video every single day this week. But yeah, thank you for checking in. Thank you for joining my journey. Subscribe if you want to follow the journey. I don't sell anything. I don't plan on selling anything. I don't want to sell anything. Ask me any questions. I'll answer them to the best of my ability. I won't ask for any money or anything. But anyway, thank you guys for watching. I'll see you guys in my next video.